normally last year we would see Powell, good afternoon,
Yeah.
100 pips down.
Yeah.
Are we likely to see Powell's effect on price action reduce significantly and more or less Trump's preference on interest rate taking more center stage for market participants?
Trump is the president. He has control of Congress. He has control of the House of Representatives. He has majority governors.
Yes.
Like, he's controlling everything.
Yeah.
So Jerome Powell will have to toe the line. Like, if he wants Jerome Powell gone or fired, he can do it at any given moment.
Okay.
So I believe Trump will have a much bigger voice in the markets compared to Jerome Powell.
Okay. Hey guys, Happy New Year. I hope 2025 is going on all right for you. And we want to welcome you back again with yet another episode of Bullish Banter, Season 3, 2020-25. I'm your host, Jesse. Rufas, how are you doing today?
I'm doing well.
Yeah.
I think it's a very good start to the year.
All right.
Yeah.
I mean, I would say, is it PTSD or nostalgia from the first ride? Hopefully, it will be more greenback printed and less sharp red knives falling, yeah?
You need a subscription to Truth Social.
Yeah. No. We will bind both X and Truth Social. Yeah.
All right.
Yeah. Before we get on, at least to cover some of the highlights for 2024, number one is, of course, Bitcoin halving, which really caused a good demand on Bitcoin and a significant price appreciation. So hopefully those who are within the Bitcoin or crypto space were able to factor that in their at least portfolios. Another significant, I would say, data set would be most of the stock market basically printed multiple all-time highs in 2024 across the Nasdaq, Dow Jones, S&P 500. So hopefully those should be continuing as Trump policy seems to be supporting that. And obviously Nvidia still continuing to break records with their splitting 7-1 and still doing 3x in revenue or returns on investments. So this is around 10% so far.
Yeah,
10% so far. So as we enter into the earnings seasons, so let's see how they performed in 2024. And hopefully for you as one of our traders, our investors, these are things maybe you will be paying attention to in 2025. Right off the pack, geopolitics still a major issue in 2025.
Yeah.
As we record this, Israel and Hamas secured a deal, and also, Trump and Biden were quick to announce victory in securing peace. And maybe from personally, I think that's a good thing, long overdue. Hopefully it shall continue like that. Given that we are recording this when it is being done, hopefully by the time this goes out, it will be the same. But what do you make of that? And of course, in your risk assessment for 2025?
Well, based on the campaign promise from Trump, he literally said that if he was still president, both wars would never have happened. The war between the Hamas and Israel and Russia-Ukraine. So he literally promised that on day one, once he gets into office, the number one item is to make sure he secures a peace deal for the four countries.
Okay.
So far, there has been a proposed ceasefire, and Israel was ready to take on a deal, though later on they had to delay after the terms from the Hamas side or something they couldn't agree with.
Okay.
Yeah.
Interesting. I think given we have an upcoming space, I think we'll have more data set, especially on those day one promises. We'll be covering a lot of what he will do within the first 100 days, plus what will be relevant particularly to whichever asset class you trade and how their markets react, be it shock effect.
And who gets fired on day one.
Definitely. Staying with geopolitics, Canada Prime Minister has resigned. I didn't see quite much reaction on Canadian dollar. And same goes to oil. Is that something that should be really impactful to the market, given that you remember when Keir Starmer came into office in UK, pound literally rallied a lot. And CAD just played like nothing happened, maybe 10 pips or something like that.
Well, if you look at the UK, it was literally a complete change of governance from one side having dominance for a long time, and now the other side gets the governance.
Yeah.
It's similar with what's happening with the US. We have seen the Democrats running the US economy, and now a sudden shift to Republicans.
Yeah.
So that had a huge reaction. But then for Canada, the guy is resigning because there has been so much pressure because he mismanaged the entire economy. In a period of 9 years, he tripled Canadians' debt. Housing has gone really up.
Yeah.
I think it's about 30 to 40% of the average income of Canadians. So a person with a lower income, especially closer to minimum wage, they're spending almost everything they're earning on housing.
Okay.
So that has made him very unpopular in the entire economy. So even him leaving doesn't suddenly fix the economy.
Because I've seen some of the candidates, be it conservatives and whatnot,
Yeah.
they do not gain a lot of traction, and I think that has created that joke of
Yeah.
Canada being the 51st state of the United States.
Yeah.
Do you think those jokes will be realized? Because if you looked at what is happening with Greenland, Denmark is considering
Yeah.
allowing Greenland to be part of U.S. territory.
Well, I don't think it's that easy.
Of course.
It's a long constitutional process where they would have to even do you call it like what happened with Crimea? They will have to like go for a vote,
Referendum.
a referendum. Yeah.
Okay.
And it would be a hard pass.
Yeah, and they have to secede as well from the kingdom.
Yeah. So the way I see Trump politics is more like he shoots very high, and then as you're fighting the big shoot, he on the bottom line he gains some ground. So at some point I see some form of let's say military cooperation deals, maybe US getting into some form of cooperation and getting some bases in Greenland and so on. As for Canada, 51st state, I don't think so. It's happening.
Okay.
So it's more like a trade war where Canada has been producing a lot of stuff, including oil, manufactured products, tech, and literally just dumping these products to the US economy as their direct market. But then the US companies don't get a similar treatment in Canada.
Okay.
So it would be more like opening the markets in Canada for US companies instead of them just manufacturing, selling to the US, and when they need something, they buy from China and other countries. So he want some form of fair agreement.
Okay.
Yeah.
Well, to be fair, American products would say they are not cheap.
Yeah, they are not cheap.
And I would say American businesses would not want to compete with Chinese products.
Yeah.
And if so now that brings me to the next question.
Yeah.
China, based on the recent data, they are having an export surplus of almost $1 trillion.
Yeah.
With all the sanctions from them never accessing, semi-chip conductors, them being denied Taiwan and the TSMC and whatnot. Trump, of course, wants tariffs, and the tariffs that he initiated before he left, Biden never removed them, so they'll still remain there.
Yeah.
Now that brings me to the question whereby we have seen the dollar strengthening, of course, Trump winning, and the tariff stock. Do you believe these tariffs that Trump will execute? Personally, I am very skeptical about it. They'll have the shock effect, but not a lasting impact on what he wants to achieve trade-wise. What do you make of that? And of course, now that you have mentioned the other countries typically go to China, given that there's this movie I was watching whereby he was saying that Chinese did not copy their destroyer, they just ripped it off.
Yeah.
Now they are doing better, they're innovating, they're making quality and long-lasting product.
Yeah.
Do you think the tariffs will have the same gravitas as it were the first time?
Well, think about it this way. China is currently leading in the export of EVs.
Yes.
Even if they have expanded to BRICS countries, added like 6 more countries.
Yes.
Those are wider markets where they can redirect their goods. But are we able to buy like the top quality products from China if they redirect their market from the US to Kenya? We cannot absorb that kind of demand. We cannot afford those products. If they try to sell the products in Iran, if they try selling the products in Mexico, I don't think they would get the same impact compared to the US.
Okay.
So the very average American citizen is the best consumer and is the best target for Chinese companies because they're able to sell their products there at a premium.
what if
Yeah.
they will look at the volumes as opposed to the profit margins?
Yeah.
Because volume also means that it opens them to various types of people. Either as a, like, let's say Kenya situation, the income per capita might not be the same as US, but volumes will be going. And if it will not be going to direct consumption, it will be transiting to other regions. So therefore opening markets, familiarizing the brand, and therefore should obviously we assume that the citizens and the governments would want to improve the quality of life of people. That would mean that still maybe they will get the I would say the value of what they're selling on a volume basis.
Well, the way I think about it is, let's say, sector by sector.
Yes.
For instance, if you look at the companies like, I would say the top companies in the US, Microsoft, Apple, Amazon, then we have Tesla. Some of these companies are basically having China as their best market. So if you look at their books, the biggest sales that Apple makes, they do it in China.
Okay.
If you look at Tesla, where they sell most cars, it's in China. So that has been a fair deal, where some other companies in China also sell their products directly in the US.
Okay.
But now if you look at the industrial sector in the US has not had access to the Chinese market.
Yes.
And that's the source of the China-US trade war. So when Trump is coming and saying tariffs, it's because the cheap products from China are basically killing American companies, but American companies don't have access to Chinese market.
Interesting.
So it's literally a war of the markets.
Just to divert a bit, I think there's a sentence Trump said which was very interesting, whereby, and I think this is his plan. He will use, say, 100% tariffs, not because he wants to do that, but to bring you to the negotiating table and then have a deal whereby, so we'll not give you tariffs. We'll let you do your business here. We'll even give you land to invest. But now you will have to do this for us, allow our products to go there. Now,
exactly.
And just to finish, I think he was saying that we see BMWs, we see Mercedes in States, but you don't see Ford in Europe. You don't see, Chevys in Europe or American muscles in other places. So perhaps that will maybe liberalize the market. What I'm interested in, it means that to some degree, American products will now start going for volumes in mass production and outshows, and less of import, maybe, to be fair, in terms of the import-export quotas.
Remember, by the time he was leaving the presidency in the prior regime, he literally had signed he was calling it phase one. Phase one of the China-US trade deal negotiations. So in phase one, I remember they did around $600 billion worth of deals, saying that now Americans have access to a Chinese market where they can export $600 billion within a single year. So that was phase one. So before he could go to phase two, he was kicked out.
Interesting.
So if he's coming back with the same playbook, then I think he's going to shake the markets from next week.
You know, for those who will get this, he was kicked out after securing a $600 billion deal. And the person who made him kicked out, or the reason why he got kicked out, was from the destination of that $600 billion deal. If you know, you know. Aside from that, will these tariffs continue the strength of the dollar, or are we likely to see dollar weakening, given that it has been rallying all the way? I think it dropped to around 100 before the election. After the election, it has been hovering 105, that is DXY, to around 110 thereabout, at least within the last 1 or 2 months. Do you expect the dollar to weaken or strengthen at least?
Well, in my analysis, the dollar is going up.
Okay.
There's a couple of factors involved. One, the Fed, it has been cutting rates since September last year. They did 3 rate cuts, 50 basis points, 25, that's 100. So a whole 1% down. And if you look at the bond markets and how they responded, they went up by 1%. So basically, the market is literally questioning the Fed rate cuts. So they're not behaving the same way they expected to have behaved traditionally. On the other hand, if you look at inflation, we had a really good drop from 2 years ago when it peaked at 9.1% in the US, just kept going down and down and down until we got 2.4% in the last quarter of last year. And then the reports we have had in October, November, December.
Yes,
There are
CPI.
3 consecutive increases in inflation.
Yes.
The latest being to 2.9%.
Yes.
So this basically shows that inflation is coming back. And main key drivers of inflation rising have been rising energy prices. We have also seen the US economy being pretty strong. So record numbers in jobs, and at the same time, consumer demand is high. So all these, when you combine that with the government spending, we are only seeing inflation coming back.
Okay.
So if inflation is coming back, there's no room for the Fed to keep cutting rates, which basically implies that the dollar will continue going up.
Interesting that you mentioned that. So you think maybe with the Fed not cutting rates,
Yeah.
and of course, I think Trump is more or less a big of a figure compared to Powell. Are we likely to see, normally last year we would see Powell, good afternoon, 100 pips down. Are we likely to see Powell's effect on price action reduce significantly and more or less Trump's preference on interest rate taking more center stage for market participants?
Well, think about it this way. In this time period, Trump is the president. He has control of Congress. He has control of the House of Representatives. He has majority governors. Like, he's controlling everything. So Jerome Powell will have to toe the line. Like, if he wants Jerome Powell gone or fired, he can do it at any given moment.
Okay.
So I believe Trump will have a much bigger voice in the markets compared to Jerome Powell.
Okay.
Yeah.
Part of there is normally this term, bond vigilantes. And there have been people who have been saying that the European bond market is now suffering from bond vigilantes. And it is evident. If you look at pound, it's basically 102s. If you look at euro, it is basically playing with parity. CHF, I think it's here and there. I think French Prime Minister has had to basically, form a government of coalition of sorts. I think Olaf Scholz from Germany is probably going out on a referendum. Keir Starmer is already facing internal turmoil. Are we likely to see Europe again, falling behind while at least other economies outside Europe, I'd say, grow economically compared to them?
Well, Europe has had its fair share of troubles, especially since COVID. The breaking point was the Russia-Ukraine war, where the major supply line for energy from Russia was bombed. That was
Nord Stream.
The Nord Stream pipeline.
Just before Trump exited.
Energy became really expensive. Some of the solutions they would get, especially through the Red Sea, the Israel-Hamas war even made things even more expensive. As a result of that, all we are seeing is the industrial sector really going down. So we have seen the recession happen in Germany, happening in France, Spain. So all these countries have been really suffering in manufacturing, mainly because energy prices went up. So when you combine that with the green energy policies that also made energy more expensive, Europe has been on a downwards path. Now that Trump is coming back and he's renegotiating a deal between Ukraine and Russia, once there's a peace agreed, Germany is already pushing to have the Nord Stream reinstated. So Europe has been going down, but from this Trump era, I expect Europe to start recovering.
Really? How will... Europe will recover. What about euro-dollar?
Well,
because I'm looking at the chart here, and this one has been basically on a free fall from around September last year, with significant pullbacks and then a proper dump. Parity is not far from where we'll see it, and I think the pullback coincide as well with the DXY, which came down to around 105. So if dollar continues to strengthen, at least for Q1, maybe out of the blues, let's say 118 for argument's sake, by end of March, that means euro will be doing what? Below parity?
It could stay around parity. 1 euro equals $1, and play around there for a while as Europe looks to recover. The big issue is in the bond markets.
Yes.
If you can get 4.65% in a US Treasury, can guarantee you no investor wants to do anything to do with the Eurozone.
So it means the bond vigilantes are really doing a damage on the European side. That means ECB and of course Bailey from UK, the Lagarde from ECB, they are having a hard time. Would you say that will be one of those currency pairs that will give you multiple opportunities at least for the next coming days?
Well, the last
are
time
you trending it or waiting for the pullbacks?
The last time we saw euro at parity,
Yeah.
they got a direct injection from the US.
Yes.
Yeah. So this is when we had Janetarian making an announcement at midnight.
Yes.
That they're adding more liquidity to the markets.
Yes.
So Europe being in trouble is very closely related to the US.
Okay.
So they will get support.
Okay.
And that support means a lot of volatility around parity.
Okay.
So we could be getting some wild swings around parity, but that might not happen before Trump becomes president.
So that would be interesting because when you say they'll be getting a lot of support, and I just think about that would mean more government spending from the US, something Elon Musk and Ramaswamy do not want to hear about. But it will mean a lot of political compromises for them. Quite interesting to see how it goes.
It's more like if a government is in trouble, it has either of two options. One, you hike taxes, or you cut your spending.
Okay.
So we have seen how hiking taxes has worked for the UK. So far this year, the pound is down like almost 3%.
Yes.
The dollar, because their policy is very controversial. It's not working. We haven't seen how the Doge will work. That's the Department of Government Efficiency headed by Elon Musk. But then for the Eurozone, we know that the printer is coming.
Yeah.
And if the printer is coming, that means parity and below.
Okay. Interesting. Let's see how it pans out for the next 2 months. To another pair, which I know a lot of traders have been following a lot, and if you do not like the volatility of gold, of which we'll come back to gold later, Japanese yen. Last year, we saw a lot of efforts from their side, be it market operations, be it, sudden hikes. And I think at some time they got a relief when the Chinese injected a lot of money in the economy. Are we likely to see JPY still continue to be weak relative to how the dollar will strengthen, or the current strength we are seeing it? I would say it is effect perhaps from the Chinese surplus data. Are we likely to see a stronger yen or a weaker yen this year?
Well, betting on a stronger yen.
Okay.
Last year, when the Bank of Japan hiked interest rates by a very small amount from negative 0.1 to positive 0.1, and then they did a second hike, within a period of 1 month, the Japanese yen gained by around 13% against the dollar. So it was a pretty violent move, especially for forex traders.
Okay.
So if they keep on doing the same, if they have, that's happening next week. If they go for another rate hike, it would boost confidence in the yen and of course the JGBs.
Okay.
So we could be seeing more investors going for those government bonds.
Okay.
And that would drive a very strong rally in the yen.
Okay.
So far already it's beginning to flip the charts since the year started. So I was doing a comparison of the top currencies around the world, and among the major economies, there's no currency that has performed better than the yen since the year started.
Interesting.
Yeah.
I think that would be one to watch out for. As we sort of come to sort of the end, two major pairs. I know everyone is looking at it, confused, excited, whichever side it suits you. Oil and gold. With the, of course, talks of ceasefire, I think the demand for gold might dissipate.
Well,
just a minute. But from my analysis, I think the deficit spending in the US will still keep pushing, and the way the bond market is behaving, I think gold will still go up. Are we likely to see maybe shock effect, maybe Trump, whatever he announces, same way when he won in November, we are likely to see maybe a few weeks of gold correcting itself, maybe retrying and retesting the 25 level due to maybe strong dollar and maybe less of geopolitical tensions before now reality sinks in. And then...
Well, I would say correlations are broken. Correlations in the very essence of them and how we have studied them in the past, they are completely broken.
Okay.
Last year, we saw gold hitting new all-time highs.
True.
the dollar remaining really strong against other currencies, the stock market going into new all-time highs, Bitcoin all-time highs, nothing was going down. Even bonds markets were going up. So if you start talking about correlations, if this one goes up, this one goes down, I don't think it works. So if you really look at the demand for gold, the demand for gold was a bit different this time. It's not like stock market was doing bad and people are taking a safe haven in gold. No, the stock market was really good. We got 29% in the Nasdaq. But gold was outperforming all the stocks, like all the top stock market indices. So this year I'm looking at China specifically. In their December report, they literally doubled their gold purchases. So one of the key driving factors for the gold rally is that Chinese investors, a lot of them, including banks, they have very huge exposure to the real estate sector. And for the last 2 years, the real estate sector has not been doing well. We have seen the Evergrande saga, Country Garden saga. So with all these companies going down in valuation, a lot of investors shifted to gold ETFs. So that demand is still there, and more central banks are buying more gold. We saw the record with Tanzania. They bought, was it 2 tons of gold last year? So it means that we are going to see more and more demand for gold. And having seen the performance last year, there's only one outcome this year. We continue seeing a strong rally in gold.
I think for me, I'm betting it not even on shock effect. Whereby, the news will shock the market, maybe damp it a bit for a week or so. Once the irrationality and the excitement is over, it will start climbing slowly like what we saw last year again. I think that is my view on that. Now, oil, I have an interesting take on it. I think oil will oscillate between at least 75 to 85, at least for the better part of this year. Maybe you'll give me your view on that. Why? Of course, Trump will drill more, so it will mean he will want to supply a lot in the market, or just make sure that supply is equal to whatever demand will be caused there. But the ones who have the capacity to demand more already have multiple sources and reserves enough to not buy at a higher price. And therefore, the extended OPEC will basically extend the cuts, and we might have, I would say, how do I put it? There'll be a lot of hoarding and less supply, especially from the Chinese who will be sorted themselves out. And I think whatever Trump will try to do will depend on if people will be receptive to the terms he'll propose during those tariffs negotiations.
Well, I think there's a couple of factors to consider. One, holding oil is very expensive.
True.
So nobody wants to hold on to oil. Oil is best when it's moving. The other thing is, we know the con game that happened between 2020 and 2024. So OPEC plus countries decide that they want higher prices for oil, so they cut their output and keep cutting, but after every meeting. In fact, they made a record cut, I think it was January last year. Then what happened is that oil demand continued increasing as more and more economies recovered, and the US emerged as the biggest oil producer and exporter in the world. So they basically lost the market share. So you are cutting your supply to manipulate prices, but somebody chips in. And then brings in new supply, takes over the market. So the OPEC countries have already decided that they are expanding the output by April. So if they expand the output by April, first executive order by Trump, we're expecting him to lift the ban on offshore mining of oil, offshore drilling. So we expect US to instantly start expanding its oil production. OPEC is expanding. Overall, we'll have much lower prices. And if you look at the main problem in the US economy right now, it's inflation. And inflation is directly related with the price of energy. So if price of energy is up, then consumer prices eventually go up. So if Trump wants to have a smooth 4-year cycle without having to deal with high inflation, then it's almost a requirement that he brings oil prices down. So in the previous regime, we saw Biden attack the SPR,
Yeah.
So the strategic oil reserve, this is where he
drew
went
all of
deep.
it. Yeah.
Yeah.
I think we'll be leaving him empty tanks.
Yeah.
And that is why that is actually my bet, whereby
Yeah.
he has basically sustained the oil by draining the reserves.
Yeah.
And by going to the market,
Yeah.
perhaps they'll put orders
Yeah.
in small bits or
Yeah.
sizes
Yeah.
to not make the market spook
Yeah.
that there's a big well
Yeah.
in the market for oil to fill the reserves.
Well,
And that purchasing,
yeah.
together with the I would say expansive manufacturing rebuild that he wants to execute,
Yeah.
will cause would say an implied demand in the market,
Yeah.
and thereby I would say speculators or futures, at least for Q2 or Q3 of this year,
Yeah.
will have a higher prices and then maybe stabilize towards the end of the year.
Well, the way I think about it, it's more like Biden was shooting himself on the foot.
Okay.
On one side, you have green energy policies, the Paris climate change agreement, then you're draining all the oil that you have.
Yeah.
That put the US in a very bad state. They couldn't even go to war because they didn't have oil.
Yeah.
Now we are seeing Trump reversing everything. So he's cutting the climate change funding.
Okay.
He's removing the ban on offshore drilling. He's literally pro-American oil.
Okay.
So this basically means that America will be able to drill oil from the ocean. You remember some time back, it was over 4 years when Trump was president, and there was this fracking technology where they would literally get oil by up to what? The cost was around, I think, $25 to $30 per barrel.
Yes.
Yeah. So if they can get the same cheap oil from the ocean, that would literally just refill the SPR and basically lower the prices in America and the rest of the world.
Okay.
Yeah.
I think that marks up the end of today's cover. It is episode 1, and therefore we'll be having a couple of guests come here. So, of course, your nominations as one of our listeners is welcomed. I think it's only fair I mentioned that Q1 Outlook will be coming towards the end of this month. So for those who always subscribe to the FX Pesa market outlook for the first quarter, you'll be able to check them out. Maybe as we begin this year, what would you say would be the, I don't want to say the stock pick for the year, but which sector are you looking at to have a good quarter?
Well, it's definitely AI.
AI.
I think AI has a really big chance of outperforming the market this year.
Yeah.
Today I saw the TSMC earnings. They literally outperformed in terms of revenues, profits.
Okay.
And we know that Taiwan Semiconductor Company is the major hardware manufacturer for Apple, for Nvidia, and many other companies.
Yes.
So if the company is really expanding and they're opening a branch in the US, then not just a branch, whole plant where they will be manufacturing from the US, then that demand is being met by some other companies. So there's a good chance that AI continues outperforming.
Well, I have an interesting sector I'm focusing on.
Yeah.
Health.
Yeah.
Whatever, RFK Jr. is very much against, I would not say against, but he wants to make sure that vaccinations and all this medical research pass through a couple of, I would say, tests before they're released to the public. So I know those companies will take a beating, and that means there'll be some good discounted companies to invest in. So I would want to see what he executes in the first go, within the first month. So for those who are investing in stocks, at least for me, it will be health sector. But of course,
personally, I would say it's a landmine.
Yes.
The lawsuits are coming.
And that is the good thing. I mean, they are not doing extremely bad on everything, but that you are making even my point for me, my case for me. Because we know they are good companies, just because maybe one vaccine which was mandated and everything caused a lot of panic to people. But hopefully, if they are able to streamline that sector, together with the unfortunate death of the health insurance guy last year, would really be one to watch out for in terms of, I would say, cheap assets to purchase.
Well, if you're looking for value, look at the companies that were hit by the fires in LA.
That has been your Bullish Banter episode 1, season 3. Feel free to share, like, subscribe. Bullish Banter on X, IG, and of course you can follow FX Pesa Official on X, Instagram, TikTok, and of course find Rufus every day at 11 a.m. on Market Snapshots, FX Pesa on YouTube. Other than that, adios.